Morning, Steve here in Chicago with the morning grain comments. Well, it's the monthly USDA supply and demand report day at 11 o'clock Central Time. We'll come out with a special video after that to kind of explain to you what the government said and how the market react to that. Overnight, wheat and corn is lower, beans are a little bit higher, led by the nearby. Over in Asia, we've got Chinese equity markets up again. We've got Chinese soybean meal, soybean oil, palm oil prices higher while corn prices are lower. We continue to see in the nearby bean market this record demand by China for beans, initially out of the United States as South American harvest progresses out of South America. And that's providing a lot of support in the nearby bean market. Over in the corn, China estimated their stocks at the highest number they've seen in 10 years, and that continues to increase the thought process that the Chinese won't need as much corn this year as some people had hoped. As far as weather is concerned, it's cold here in Chicago, but with the thaws coming, well, we're looking at the possibility of some 30-degree temperatures on Thursday and again on Sunday. Long-range maps are hinting that we'll actually see some warmer and closer to normal temps as we get later into February. Along with that will come some moisture, especially across the southern plains. It might help the wheat there. South America, we're seeing maybe the breakdown of the ridge in Brazil and maybe some good weather in Argentina. So we expect today the government to up a little bit the Brazil crop, even though the soybean crop has been hurt by this dryness recently. And they probably will lower a little bit the Argentina soybean crop. A lot of people will be watching the world wheat numbers. There's some people who think that world wheat demand might be a little bit bigger than what the government is saying, and that might lower some of the stocks. What the government is supposed to say today is they're supposed to say that U.S. corn demand for export, U.S. soybean demand is a little bit higher than what they said in January. And if they don't raise imports, especially in beans, they're going to lower the carryouts, and we should have a knee-jerk reaction to that. Some people think, though, that assuming normal weather in 2014, you could be putting in some pretty strong highs in corn and new crop beans after this report. Old crop beans is still a function of just how much China takes, how much we import, and what the USDA does as far as the residual is concerned. So the soybean market is kind of a tale of two markets, bullish old crop, bearish potentially on the new crop. Still, 2014 weather forecast looks to be normal. There are some parallels between the mid-1930s U.S. weather. In 1935 we had a good crop, in 36 we had some dryness. So our weather guy put out a special report today and talked about the potential dryness in parts of the western Midwest and the extreme southeast U.S. as the summer progresses based on some similarities between this year and 1936. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.